After months of banks trimming mortgages and the official cash rate steadily decreasing, Westpac has actually moved in the opposite direction, hiking several of its longer-term fixed rates. Its 2 to 5 year home loans have gone up by 30 basis points. So that takes the 2-year rate, for context, which is a common fixed rate, of 4 to 4.75%. So joining us now to give us an idea about what is happening to underpin that change is Westpac's Chief Economist, Kelly Eckhol. Good morning to you, Kelly.
Good morning.
I am wondering whether this is an indication that we have seen the trough. It's up from here for interest rates. What's your take on that?
Well, that's certainly the impression that the market has taken. So they've perhaps gone along a little bit further with it than perhaps is justified by the data right now. But that is the message from the financial markets, that interest rates for the OCR have gotten as low as they're going to get for the foreseeable future. And the questions now are, how long does the OCR stay at 2.25% and when does it start to rise?
Why, when the Reserve Bank's last move was a cut, did the market immediately jump to, the next move is going to be up? Was it something in the way that they worded it that has given the market that impression?
Well, I think part of it is the surprise that they got that the Reserve Bank actually explicitly called time on the easing cycle. That wasn't really expected. Investors actually had bets that they thought there was a chance that interest rates could fall a little bit further, and the Reserve Bank was saying that there's a pretty high hurdle for that to occur now. And these global capital markets are quite large, and there's a lot of people quite surprised. So they're in the process of readjusting their views, and this is what sometimes happens.
We've got a new Reserve Bank governor. She's only not even 2 weeks into the job, I think, but she was talking yesterday and saying, look, there's no set course for interest rates. Is that an indication that she's maybe a bit concerned that the market has got ahead of where she's at?
I didn't really take that comment as meaning that. I mean, I think it's a pretty sensible comment. There shouldn't be a preset course for interest rates. Actually, if anything, I think that if she wanted to express concern about where interest rates were, she should have probably been a bit more explicit about that. The reality is the Reserve Bank's own forecasts don't suggest that interest rates will be rising in 2026. They basically suggest that's a 2027 story. She could have mentioned that, I think, if she wanted to send a stronger signal.
So effectively, the market disagrees with the Reserve Bank. It thinks interest rates are going up next year.
Well, I think that there's a chance that things will happen a lot sooner than what the Reserve Bank says, and a lot sooner than economists think as well. I mean, I think I've probably got the most hawkish forecast out there at the market at the moment right now. I'm thinking that the first rate rise will happen at the end of next year, whereas the market pricing is thinking it could start perhaps even as early as May.
So do you think then that other banks are likely to follow Westpac's lead in putting up rates? And if so, is it time for people who might have been biding their time to lock in some longer-term fixed rates?
Well, I mean, if you look at what has happened to wholesale long-term rates, they've gone up by almost 60 basis points now than where they were before the Reserve Bank meeting. And every bank faces that same cost. So I think we're all in the same boat here. I mean, we've put our rates up 30 basis points, which is perhaps half of that change. Everybody's margin between where the mortgage rate is and where those wholesale cost of funds are has been squeezed. For the 2-year rate, for example, it's typically been around 0.15% since the global financial crisis. Right now, even on our higher rate, it was at 1.6%. So that just tells me that everyone is going to be feeling the same pressure.
So when you say that the market pricing is at 0.6, you guys have passed on 0.3, you're absorbing some of it. Can we be grateful for that?
Well, I mean, it's what happens. The thing is with market rates is you can't necessarily assume that they're going to stay at this level for a long period of time. I mean, I think it is likely that the market is overshot here and that in time that these rates will come down a bit. But the core message of markets here is that we've seen the lows on interest rates. Unless something new comes along, which is probably going to be bad news and pushes those interest rates down again. And I'll say as well, part of this is what's been happening globally. Australian interest rates are up by quite a large amount, 50 basis points over the same period. The European Central Bank governor is talking about upgrading her growth forecast for the euro area. Canadian and Korean interest rates are all rising as well. It's part of a global trend that after a long period of easing, we're probably at the turn now.
Oh, so everyone should be looking carefully at their budget and the rates available, and as the Finance Minister said, shopping around if they need to. Thank you so much for your time this morning, Westpac's Chief Economist, Kelly Eckhol.